Don't look now, but we finally got a red day in the markets. But as a dividend investor, I welcome the pullbacks as they represent an opportunity to add more into my long-term investments. It's your favorite investor, and this video we'll be going over some of the best dividend stocks to buy, where they're at in the markets. And I'm gonna just let y'all know, I held off on buying most of my dividend ETFs since the market was rallying for literally the last month and change. And honestly, the time to buy stocks was in early to late October, somewhere down here. That was probably the best time to buy. So I've been holding out, but don't worry about it. If you missed out, we're gonna break it down and we're gonna talk about where some of the best dividend stocks are trading today and what I'm preparing to do. So of course, we're gonna start by looking at the mother of them all, SPY, and today we had a minus 1.39% day in the market, which is actually pretty big. That's a pretty big down move, and honestly I was expecting to see something like that probably in like early December, but it's the middle of December now. We ended up coming up to about 471 on SPY, and we hit some resistance and started coming back down. Now that's good news for markets, as I do expect some good opportunities, some good buying opportunities for some of my favorite ETFs and dividend stocks, so I can start buying some more shares. I do buy weekly, however, I do keep some money on the sidelines ready for dips. So right now on SPY, I'm looking for this to come back down into about 460, 459. I like to see that before I start really putting some more money into SPY, as we can potentially start to make a higher low from here and continue this uptrend. Now, that doesn't mean that it's gonna stop, it's gonna make a perfect stop here and bounce back up and keep on racing towards all-time highs. No, what I'm saying is this is an opportunity for me to buy more shares at cheaper prices, cheaper than this 472 price. I believe that this is gonna be some great entry points for some long-term positioning and some swing trades. Moving over to SEHD, this thing has been on a tear as well, moving right along with SPY. It finally came and broke above this $73, $74 price range, and as it was approaching 75, it kind of started to hit some resistance, hit 76, and immediately rejected. Now for me, I would like to see it fill this gap, come back, and possibly give me some more prices at 73.50. I would then go and load the boat on SEHD. I love dividend compounding and that dividend growth that they offer, and I hope that I can get some more shares at great prices. They currently pay a 3.5% dividend yield. Like I just said, I love my dividend income. So if they come back down and give me that price, I will definitely go ahead and do that. Another option that I might be going and looking at is also possibly running, if we can get that pullback, running a cash secured put at around $72 or $71. I'll figure out which one is the premium, and I'll probably take this out to about 120, maybe even 200 days out, so I can collect as much premium as possible. And if I get called for these shares, fantastic, as I do see a floor down here around 66, in between 66 and 69, especially with this gap that's here now that I'm looking at it. But I'll have that cash secured put open at 71 or $72 is a perfect price. I like that price, and I wouldn't mind writing a covered call against that if we get assigned. And I'm gonna get some nice premium on the way, on top of the fact that once I get assigned, I'll be getting those dividend payments as well. So moving on, let's look at some of the bigger holdings in SEHD. Let's look at ticker symbol AMGN, AMGN. They pay a current dividend yield of 3.23%, and at the moment they're pulling back from their highs at around 286, 290. It looks like they tried to push and couldn't. So this is going to be a pivotal zone right now. I wouldn't necessarily be buying AMGN if you like picking a la carte stocks. I would definitely wait for this to come back down and possibly give you an entry point in the 266 range, and look for your 260 to be kind of your support. If anything, this thing is still in an uptrend, so if you have been in this stock, I mean, you guys can see it. It's clear as day. Just continue to hold and let this thing pay you out dividends and continue to print in capital appreciation. Moving on to Pepsi, I wasn't a swing trade here. I ended up coming out of it. However, this is still a fantastic stock to buy and hold in your long term. Pays a 3% dividend yield. At the moment, they have been in an uptrend and just recently broke down from that and retested and couldn't get up. So what I am expecting here is cheaper prices on Pepsi. However, if you're looking to add shares to the long term, this is a fantastic point to do so, as right now you're getting some of the cheapest prices you've seen since probably September of 2022. So this is a fantastic time to continue to add more shares of Pepsi into your portfolio if this is a company that you're holding for the long term. I think that this is a fantastic company. And I mean, you can't beat this price right now. You're buying at a great price. Do not run from this if you like this company. And last but not least on the list is ticker symbol ABBV, otherwise known as ABBV. They pay a 4% dividend yield, and they have also been stuck in this range in between 163 to 135. And right now the current share price is 151. They're currently in the middle of this range. And if you're looking to add shares, I would say that this is a good time to just continue accumulating and getting as many shares as ABV as possible. I believe this is a good company and has a huge upside potential ahead. So if you are interested, this is a good time to just continue to buy. This price is pretty much not going anywhere. If we get prices at 134, definitely start loading up the boat. And as it starts to approach 161 and 164, I would tailor down some of my buys so like that I can capitalize on buying my shares cheap. Now, what am I doing at the moment? I'm currently still investing in markets. Like I said, I have about 50% of the money that I set aside to invest going into buying funds like IVV, SCHD, and XLK, and then the other 50% I have on the sidelines just chilling, waiting so I can continue to buy more shares at cheaper prices. Right now I am still buying shares, but I am waiting for it to come back down and give me an opportunity to get them at better prices. And like I said, I will be looking at writing a cash secure put on SCHD if we get some more downside momentum and I can get a strike price that I like with the premium that I like. A lot of people say that you can't run the wheel on SCHD. However, I've been able to make an extra $400 this year on top of my dividends just running the wheel strategy, and I haven't really gotten assigned on my cash secure puts. I haven't had to write any covered calls, and things have been working out really well, so I can't complain. Anyways, that's all I have for you guys today. Be sure to check out the links in the description. I post trade setups on Twitter, and I also have a dividend calculator to help plan out your investment goals. Although I do speculate and trade, I always make sure I'm investing in long-term equities to build my wealth. As always, thank you for watching, and be sure to hit that like button and subscribe for more financial content. It's your favorite investor, and I'll catch you on the next one. Peace.